Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, everyone. Ira Epstein of Linn & Associates with your financial market update for this Tuesday. And we are now on the 20th of June. I'm saying that slow because it's the last day of spring and we're going into summer. And we are now coming into where the markets, obviously, they've been closed. We're going to get on shortly and they'll reopen here. We're in the 4:40 time frame. And as you can see, a small decline in the stock market. Nothing major, but a decline. And that probably was due in large part to the break in the gasoline and in the crude oil numbers, which have entered now into bear market territory with a 20% decline in crude since the beginning of the year. So prices continue to come down. The API numbers showed a net draw, and that's good news, a net draw of about 1.25 million barrels. The API is expected to do the same. Now, when I use the word net, I'm adding together oil stocks, distillate stocks, and gasoline stocks, because at this time of the year, you look at everything. If we're not going to draw on the gasoline and the distillates, and our tank areas are getting full and people aren't driving, it's not a good thing. But we did get that draw, and the EIA is forecasting in terms of net numbers a very similar number. We'll have to see what that does. In the grain market, if you look at the corn, the meal, the soybeans down. Where the action is in the wheat. And if you go to Minneapolis wheat, this is where the big problem is. And it's because at the beginning of the seasons, we were looking at wheat getting hurt in terms of not enough rain and so on, and it hasn't changed in the northern plains. And what is taking place is the protein content is getting hit because of that. You were up 16 cents in that contract today. In Chicago, we're being dragged higher. It's not the same content. You like your really good flour for baking and cakes and all. That's the Minneapolis grain that you're looking at primarily. As we take a look at the dollar index, another gain here and a little bit of a decline in the foreign currencies. But in the stock market, it appears that every show I appear on, today I was in Australian news, each day I'm on a different one, Canada, it's all over the world. Next week again I'm on Bloomberg, I think at the end of this week I'm on Fox again. But as you take a look, the market's up, backing off a little, but so what? The weekly chart is still up, 76 points. It's not bad action. If you take a look at the highest close, it's 21,461. You backed off today 24 points from it. So when everybody's telling me, Ira, this market's looking heavy, I don't know what they're talking about. So far, we are still very much in the bull camp. Markets absorbed an interest rate hike. The Fed can talk all they want about future hikes, and they will. But that doesn't mean it's September. They're going to need the data to prove it. Everybody admits, the Fed governors, you don't want to get too far ahead of yourself. So, December, most likely the next one, balance sheet talk, maybe. The word is maybe. Until President Trump decides who's the next Fed governor, I don't buy into the theory that Ms. Yellen's going to start the balance sheet program of reduction. I think she'll let her next predecessor, if it's not her, do it, or she'll take it on if she knows that she's the next Fed governor. In looking at a September Dow Jones, just looking at how the action's gone, I'm not even going to draw the lines. You can see how far the market has gone to the upside. And more important, when I put on the swing lines, you get to see these, if you call these apexes, right down here, the valleys of higher lows and higher highs on the upside. That's certainly an uptrend until 21,218 is violated on the current pattern. And what's going to happen is you're going to start moving up the 18-day average of closes and get over that number very soon, unless, of course, you get a monster break in the market, and I don't see that in the cards, but at any point, anything can happen. Now, in this area, where do you think the resistance is? And I'm going to tell you, I think it's the upper Bollinger Band. And the market today pulled back and on the close, closed under that band. So yesterday over it, today under it, but the market's pushing on that band to the upside. It's expanding two things with it. Number one, the trajectory is no longer sideways like it was here. It's now pointing slightly higher, and it's widening it out ever so little, but it's widening. Momentum, you have the embedded reading. Lose the embedded reading by the red line. The value is 92.5, closing under 80. And I will say that I think price and the 18-day average are going to come together. Doesn't mean they have to, but that's what I'm going to say. You're not there at this point, so pullbacks in the market don't have to get back to that number. When you take a look at the NASDAQ, it failed at an important area today. Again, the market goes up. 57.94 is the 18-day average. Excuse me. I'm going to sneeze, so I'm trying to hold that in. 57.84 was the high of the day, and you backed up from there 50 points, so that's quite a bit. So this area, and I pointed this out this morning in my subscriber video, is very, very important. That's what I'd be watching. As we take a look at the E-mini S&P 500 index, we have the lower low, the higher high. You yesterday and today challenged two times the upper Bollinger Band, couldn't push it out. You seem to be drifting back. Would not be surprised to see a challenge of 24, 27.5, something in that general zone. And I say that because momentum is pointing down, not up. So I look at a market there that's just caught in the sideways action more than anything else. In the Russell, there was a big article, and I think it was this morning in Reuters that I was reading, as to how the open interest who owns these contracts is quickly shifting very fast over a 2-week period to people getting more and more bullish on the Russell. Okay, I can't deny that. The neutral zones, the 18-day average of closes, let's call it 1,401. You got down today to 1,401.8. So maybe it's 1,490 there. So you're virtually coming into that support zone, but momentum's pointing down. The swing line is down. What would get me more excited if that article's right is take out 1421.40 and don't get under these numbers. That might be interesting and turn the swing line up. In the VIX, I have pointed out to you, and I'm doing it in my morning subscriber video, how this sideways action is what you focus on. This market is not broken out one way or the other. We had this one aberration in the market. The market immediately, within 72 hours, pulled back to the 18-day average, and it's been stuck hitting it back and forth almost on a daily basis, causing these Bollinger Bands to collapse back in and end up in this funnel. And that's all that I think you've got, that funnel action. Now, what's happening in the curve yield's real interesting. We get these Fed governors coming out, and they're hawkish. They're talking that there's another rate hike this year. So that keeps up 2-year, 5-year notes. But the market's not buying into the very longer-term economy cycle. There's questions. Is this economy really going to fire on all the cylinders it should? I say it will, and this market would come the other way if the president can get his tax reforms, health care, other elements through. Every time we see there's not something good, what's happening is the long part of the market's going higher. Well, what that does is it takes, when the market is an inversion market, the higher this goes, the lower the September 30-year bond yield is going. So it's dropping as the Fed controls the 2- and 5-year and the really short-term money, and they get together, and it's called a curve yield. And they're flattening out to levels we haven't seen, some people say a decade. I haven't gone back to do the work, but they might be right. In the 10-year chart, notice where the market's fighting. The 18-day average of closes, 2 days in a row. Swing line is down. Momentum was down. It's flattening out right here against that number. I'll call it a sideways market more than anything. Then in the dollar index, yeah, you closed higher today, and yes, you got over the upper Bollinger Band, but you couldn't stay over it. So now that we've got 3 times in a row, basically, out of the past 4 days, not 3 times in a row, 3 out of the past 4 days, the market has played at that number and could not go anywhere. It's also overbought. So it either pumps out of here real fast, or this overbought condition is just like somebody running a marathon. They're going to go, they don't get that second win, and the market will fall back to that 18-day average. I don't know which way it's going here. The trend is up. The bias is up because you're over the 18-day average. I'm concerned that you're overbought and not even attempting to embed here, and the market's not having success at that upper Bollinger Band. Is this an area to go short? Absolutely not. The trend is up and the bias is up. Overbought in itself can be alleviated if the market, like it was getting oversold here, and it goes into an embedded reading, and then you're even dropping further with the market. So no, you don't fight that. The trend is up. The flip-flop is true in the euro currency. We've now gone 1, 2, 3 days in a row that we've hit that lower Bollinger Band. You're starting to bend it out a little bit. The trend is clearly down. I don't believe you ever sell into a Bollinger Band, and I don't believe you ever buy into one. Period, okay? I don't change it. That's what I teach in my courses, and that's the way I'm staying. I've just seen too many people get annihilated. You know, they sell it here. Where do you come out? I don't know. You know, and that's the name of the game when you're using leverage. You've got to have an area where you can call uncle and get out like a gentleman and say, okay, that trade didn't work, and forget about it. Why did it lose? You might want to look into that, but you're never going to come up with all the reasons. It can't be done. In the September British pound, higher high, lower low, down to the 100-day, lower Bollinger Band and oversold. Might be a good reason for short covering right now, but there's absolutely no reason to be a buyer. And from everything I'm seeing, I believe that this period right here was the relaxation period in the pound, and now the market's having to do with a real fit of Brexit and what it really means. In getting into the yen, the trend is down. The market found support against the 100-day average yesterday. Same today. Couldn't quite make it to the lower Bollinger Band. Might set up a trading bottom here for a move back to the 18-day average, but I think that the traders, if you can get out of this oversold condition, would want to be sellers, not buyers on this market. There's no reason to run to the safe haven just yet, and they're committed to an easy money policy. In the crude oil market, look at these waves down. Now, I think today was an important day because you got to the lower Bollinger Band, you held it. So I think a lot of traders got out today. I think they're going to look to resell again on a rally. We'll see if I'm right or wrong because of the embedded reading there. You didn't quite get that low in gasoline. You could be headed to the 138.5 zone there, and in the nat gas, a one-day bounce doesn't prove very much now. We are oversold, but this is also important. Both numbers are under 20 today. Yesterday, both were under 20. If you don't rally, you weren't here under 20 on Friday of last week. Tomorrow's a key day. This market should try to rally and prevent an embedded reading from occurring. If it does occur, traders will look to be sellers as long as that reading stays in place, in my opinion. As you can see, the boards are cleared behind me. The market's getting ready to go, and I want to get you to go. In the mornings, I like you to have a cup of coffee with me. Love it. And watch my videos. I get you set for the day's trading. I record these at 8:30. I wait until the meat markets open and the grains to reopen their session. That's why I do it at that time. I am up way earlier than that, folks. By 5, 6 in the morning, I'm already pretty up on what the markets are doing and where I want to be. So I'm in the office ready to go. But we have a lot of people that follow other markets, grains, the meat markets, and it's important that I get all the information to them too. So I record my video, and my video covers 40 markets at a time, telling you buy here, sell there, and I reinforce what I teach in my charting course. People have asked, well, can I just get that and not take the course? Well, it's like saying you want to do this as you golf, okay? Yeah, you can do it, but if you got two arms and they work, why wouldn't you do it this way? Got what I'm saying? So the more, the better. That's really the key. Then you understand. Then I write about everything I see. Now, my writing's at specific times. At 11:30 in the morning, I try to get out my first email. Now, you can go out 11:45, you can go out noon. These are central times. Depends how much I'm doing and how buried I am in the day's activity. But they'll go out to one and all at the same time. Second, I put out an oral recording about what's going on. I do that after I've done everything else. That'll be sometimes a minute or two after, sometimes a longer period after. Again, what's my day like? As long as I've given you via email the research what I think you should do, away you go. And then in the morning, because I do one at 11:30, I do another one of those written at 7:30 at night. It's in your hand by 8 o'clock at the very latest typically. Sunday night's a little different in the summer. It could be a little late then, because I'm having fun with my friends and family and whatever. But In looking at all that, then at 8:30 in the morning, I'm back in and I'm recording Monday, Tuesday, Wednesday, Thursday, and Friday and giving you new information, what the charts are doing, updated, and away you go. If you think that'd be of interest to you, try my research. If you've had a free trial, you only get one. If you haven't had a trial, it's so easy to do it. All you do is either give us a call at 866-973-2077. You see the number right here coming up. Go to our website. You'll see a carousel of free offers. Go right here on YouTube. You'll see an icon up there. Click that. The form will come. Or underneath us on many websites, it says, click here for Ira's free offers. Do so. They'll be sent out to you. I'm Ira Epstein. You have a great day, and I'll talk to you tomorrow.